Welcome to the C-Suite series presented by Channel Check and Noble Capital Markets. Noble is an SEC-registered, FINRA-licensed broker-dealer and the source of the equity research available on Channel Check. Today's interview features Digerati Technologies, OTC ticker symbol DTGI. Noble Senior Research Analyst Michael Kupinski interviews Digerati's CEO, Art Smith. Visit channelcheck.com or click the link in the description to access equity research, news, and advanced market data on Digerati, all at no cost. And now, here's Michael and Art.
Art, let's go into the questions. Following our last C-Suite interview that we did, which was about 4 months ago, there's been some challenges and the stock hasn't reacted very well. Can you give some high-level remarks on what has been some of the highlights for the company over the last 4 months? And we'll get into a little bit about your announcement yesterday, but let's get your thoughts about how the company's performing and in the direction that you're going.
Well, Michael, I think we performed really well. As you know, we've announced first quarter results back in December, and that for us, since our fiscal year ends July 31, that is for August, September, and October. We had a really good quarter. We grew revenues by over 140%, 143% to be exact. Reached about 3.8 million in quarterly revenues, which annualized really gets us to a little over 15 million in annualized revenues, which is really what we were targeting. If you look back at some of our discussions and guidance we provided, so I think we've done really well. As a smaller operator that's on a M&A track here, as you've seen here with the latest announcement, we've got to be really careful to balance resources between our organic plan and then our M&A plan, right? So I will admit that's a little challenging at our stage, right? Because we're still relatively small. There's very few of us, right? Going into this latest transaction, we were right at 46, 47 employees. This last transaction takes us to 60. So I think, considering where we are in terms of our plan versus what we've communicated to the investment community and what we've publicly disclosed, I think we're right on track. We have publicly stated that we're very active in the M&A space. We've got a financial partner in Post Road Group that's very supportive of our efforts. I think all that was confirmed here recently with the acquisition we made of SkyNet Telecom. I don't know if you want to go right into that, but we're pretty excited about that. And it was a lot of work over 3 or 4 months to get that done, and we got it done by the end of the year.
Well, I'm going to save the best for last, so I'm going to go into a couple of other questions.
Sure.
Obviously, we're all dealing with these macroeconomic trends, inflation, supply chain issues.
Sure.
It had a negative effect on consumers and particularly on small businesses. And I was just wondering, have you seen any issues related to supply chain or inflation or even labor shortages that have affected the small businesses that you deal with? And what are you seeing in terms of the appetite for your telecommunication services from small businesses at this point?
Yeah, I mean, it hasn't really impacted demand for our services in the market we serve. What I can say about the supply chain issues that we're facing as a nation is that it has impacted our ability to provide certain devices, equipment, right, that we provide to our customers as part of our service offering. We've had to make a few shifts here and there on products or technology that unfortunately is just not readily available, right? The good news is we've got a lot of options, right? We're not stuck, or not, I shouldn't say stuck, but we're not confined to a certain technology or a device by a manufacturer that puts us at a halt if it's unavailable, right? Our system is able to interface with different technologies out there, and I'm referring to devices like VoIP phones, right? Cloud-based telephony phones, units that convert from digital to analog, right? For fax services, things like that our customers need at the end of the day, right? For a cloud-based service. Fortunately, again, we're pretty diverse in that regard, but there have been certain units that are just not available. So we gotta pivot a little bit there, right? Our customers, we've not really seen, again, the supply chain issues, the labor shortages impact decisions our customers are making to move to the cloud. I think in some cases maybe that it's accelerated by that because they feel they can move to the cloud and that they're going to not only save some money, they're going to be a little more flexible on how they maintain their workforce, right? They can go with a remote workforce, right, and versus having everybody at a single location. So I would say that has not had an impact on demand for our services.
And just to be fair, you obviously, in terms of the services that you provide, you could sell the VIP phones, for instance, in the bundle, but how often do the customers buy themselves?
Yeah, sometimes, the customer decides, they go onto Amazon or Google and they find a phone that they say, well, I can get a pretty good price there. Of course, when we provide the device, we stand behind the product. There's a warranty, obviously. We will make sure we integrate that into the network that we're providing, the service we're providing. So it's part of the whole customer service package that we provide to the end user or the customer. So it's important for us to be a part of that, right? But if customers decide, or maybe they already have devices that they had with another provider, we'll allow them to provision to our network with those devices. So never an issue there. But it's probably, I want to say 80% of the time they go with our hardware, our equipment versus their own.
Gotcha. And then, of course, with the fast growing cloud-based telecommunications industry, innovation plays a key role in developing company, especially like yourself. Can you give us some color on what the company is working on right now to remain a leader in the industry and just kind of like what the future you're anticipating is going to look like?
Well, I think before I've referenced, in fact, in our interview 4 months ago, I may have talked about the integration with other systems that's becoming really key to what we do for our customers, right? That includes integration with other customer relationship management systems, CRM systems. It includes integration with other applications, maybe that support messaging, as an example. So in both of those areas, we're doing quite a bit. We are now, this is something I can't talk about publicly yet, but we are actively working with another group that's going to help us with integration with other CRM applications out there. I think that we integrate with NetSuite as an example. We did that directly with NetSuite, and we've done something similar with Microsoft Teams, right? So that's stuff we'll do direct on our own, but fortunately there are partnerships out there that are available to us that help us integrate with other systems and really leverage the development that some of these third parties have done over the years to integrate with systems that maybe are not as popular as NetSuite, right? Or not as widely utilized as NetSuite or Microsoft Teams. So we're actually well down that path, and you'll see some stuff from us here in the near future about that. We're also working on some strategic relationships related to expanding our messaging offering, our text messaging offering. We're finding that a lot of customers really want a more robust messaging platform in terms of what we provide, right? To be able to communicate and engage with their customers, right? Again, it's important for us, and it's really good for our product in terms of stickiness, to help our customers engage with their customers, right? When we do that, we're helping them, potentially generate more sales, right? Or get more traction with their customers and interact better with their customers. And that's important to us because it's, probably the most important thing to our customers, right? So you're going to see a lot of development in those areas that I've mentioned and other applications in the future.
Well, what's great about the company too, Art, is the fact that it's not just a roll-up strategy. You have a really growth business here, so you have the best of both worlds, so to speak. Last quarter, you released a triple case study regarding the effectiveness of your UCaaS solutions systems, which resulted in very positive results across a wide range of industries. Can you touch on the main points, what you learned from those case studies?
Yeah, sure, Michael. So, I think the main message across the board here with the case studies we provided is you've got to be diverse in serving your market, especially in our case when we serve a small to medium-sized business market. That can be a 5-employee business or law firm, or it could be a 700 employee bank, right, as an example, or medical services business. So I think, speaking from, the memory or what I recall about the different case studies, I think we've had maybe 4 or 5. One of them that we're really proud of is a customer that serves or provides clinics in corporate campuses, right, throughout the United States. That actually started as a small business account, right? It was one location in San Antonio that also had a call center application requirement, and it's now grown. And of course, this customer has grown through acquisition, by the way. And so this has now grown to a point where we're serving, about 22 corporate campuses across the United States where their clinics are located, right? And we've done a really good job for them. It's important for them to have, a rapid provisioning of their service or system within the corporate campus. And we now do that. We just kind of follow them, right? Wherever they open up a clinic in a corporate campus, and that includes American Airlines, Coca-Cola, it's a few examples. We're there to help them, right? So that's one good example. And I think we also had a case study of a municipality. I believe it was in the southwest region of Florida, if I recall correctly. I don't have the case studies in front of me, but I think that was one of them. And we actually designed a network for that municipality that was rather unique. What they needed for their regional strategy or their regional service there in that market. And so I think, it's really key to see or to point out the diversity in terms of what we do for our customers and the different types of customers, right? So, I think when we talk about small to medium-sized business, everybody's thinking about that restaurant, right? Or that, retail outlet just down the street, and those, we do have those types of customers, but, we have others like in our case study that, pretty good sized clients for us, right? Again, it could be a bank with 700 employees.
Well, you never rest, right?
Right.
So the last quarter results, we saw that big jump in professional fees, and I thought, okay, you guys are going to be out there making acquisitions, and of course, you have a lot of irons in the fire. Certainly, we're going to talk a little bit about one that you just announced, but I was just wondering if you could just give us some color on the market environment and the M&A environment right now. Obviously, you have a very specific strategy in what you look for in terms of your roll-up strategy. Maybe it'd be good to highlight that again and talk about what you look for in acquisitions, and talk a little bit about what other things that are causing that legal and professional fees to be a little higher than normal.
Yeah, so the legal and professional fees include a lot of things. It's not just the attorneys doing the documentation for the transaction, right? And I don't think we've talked about this before, Michael, but we go through a process that includes a customer survey. We have a third-party group that helps us with surveying the customers that we're acquiring in that transaction or in that acquisition. We have some metrics that we want to measure against, right? Which are important to us to understand and know that we have a great customer base that we're acquiring, right? And we get a lot of good feedback in that, Michael. So, there's expenses related to that. We always do a quality of earnings, report on the acquisition target. I think that's pretty standard, but it's important for us to do that. That's part of those fees. Of course, we got the, as I mentioned, the legal fees. And then sometimes we'll have other professionals come in and help us with, some of the accounting related to the transaction, right, that are specific to that. Because we are acquiring smaller regional providers, they don't have audited financials, right, in most cases. So, we want to come in and be able to get a good, do our due diligence with regard to the accounting and finance. And sometimes we've got to come in and help them, clean up some of their financial statements. Maybe that's not the right term, clean up, but kind of bring it up to par, right, for purposes of integrating with us. And so there's usually some accounting fees associated with that as well, aside from the due diligence reporting. So all that adds up. Now, one thing I want to point out is that what we have been working on with the various professionals that we contract with to assist us with this is we're looking to streamline that process on the legal side, on the professional fee side, right? So a lot of the documentation that you see, or a lot of the product that came out of this last transaction, we're actually looking to take that forward into future transactions, right? So there was a lot of work actually done most recently on the transactions that you're referring to and the legal and professional fees that we've incurred. And also, I want to point out that we've announced SkyNet, but that may include other activity related to our M&A strategy that just hasn't been disclosed yet. And of course, I can't talk about that, but so you'll see that on our P&L sometimes, right? And then all of a sudden you'll find out, well, that's why, right? They acquired SkyNet. That's where they've been investing their legal fees and professional dollars. So that kind of helps, I think, tell you how active we are on the M&A side. Back to the targets, it's so straightforward, Michael. For us, it's pretty simple. We're looking to acquire, smaller or regional providers that have done a good job of taking care of their customers, in a particular market, local market or regional market. These are companies between 2 million and 10 million in annual revenue. Typically, again, they've done a great job of taking care of their customers, so they've got churn well below the industry standard. We try to manage your key stay below 1%. Every one of these, and I'll tell you, SkyNet was well below 1%, right? Less than 0.5% in churn. We like to see that, and there's a reason that they have low churn, is because they take care of their customers, right? And we think that's what's missing from the bigger guys as they've scaled, as they've grown to be billion-dollar companies. Not to say they haven't done a great job, they have, but they've moved away from that local touch and that human touch, as we referenced in the SkyNet press release, right? So that's important to us, and there's just so much opportunity out there to consolidate these smaller regional operators like the ones I've described, and we're just going to keep doing it.
So let's talk a little bit about SkyNet Telecom. You just announced yesterday the acquisition. You indicated that they had 3.4 million in revenue, so that certainly is within your target range of 2 to 10 million. But can you give us a little bit more color on, I know it's located in Texas, but can you give us a little bit more color on the synergies that you expect out of this, the cash flow maybe, the multiples that you might have paid for it, a little color about the transaction?
Well, I think we'll have an 8K out, in fact, today, that'll have more detail on the transaction. I can tell you that we were well within the range of 0.8 to 1.5 times, revenue. It's typically what we're looking to pay for an acquisition target that fits our model. From an EBITDA perspective, I can't go into too much detail there, but again, we're looking to really maximize the EBITDA production from the synergies, and that gets back to and I'm talking about cost savings, cost synergies. That gets back to our discipline strategy, right? If we are buying the company, number one, that fits our model or our profile in terms of size, 2 to 10 million, and they're on the same technology stack that we're on, right? As an example, we're going to get a lot of synergies out of that acquisition, right? So, and in some cases, there's similar back office systems, right? And so all of that integration is going to result in cost savings. And then you've also got, personnel. Because again, it's almost identical to what we're doing today. There's savings in terms of personnel, right? You might have some duplication, right, that you can slim down on over time. So again, because we're following this very disciplined approach, it's not like we're just buying revenue and then trying to find out afterwards, well, where do we get some cost savings? We know going into these transactions exactly where we're going to save, money, and we map it out going out a year. And as I've said before, typically it's a 90-day, 6-month, and then 1-year plan. And at every one of those points, we've cut out some costs, right? And some of them can be very near term. There's some telco-related costs that basically come out within the first 30 days, right, that we reduce. That happens right out of the gate. And then there's other technology costs that we can get done in short order within 90 days. And then others take time because you've got contractual relationships, you've got back office systems you need to integrate. But over the course of a year, our goal is to completely integrate that system, or that acquisition, and derive savings from across the board. Again, systems, network, personnel, and other SG&A costs.
First of all, Art, is SkyNet cash flow positive now, or do you anticipate that it will be once the synergies are in place?
They are cash flow positive today.
Yeah.
And so, again, we'll disclose more as we produce results on that acquisition.
Terrific. And in terms of your target acquisitions, would your target acquisitions all be cash flow positive day one, or do you factor in the prospect of maybe they're showing losses now, but we might show positive cash flow as you integrate them?
Every acquisition to date has been positive cash flow, and we look for that day one, right? I think it's a little harder to derive synergies and cost savings when maybe they haven't scaled to a point where they're producing positive cash flow, right? And that deal is probably not the right deal for us. So fortunately, every deal we've looked at, again, the profile is if it's a smaller regional operator, between that 2 million and 10 million in annual revenue, They've got contracts with business customers in their market. It's all recurring revenue, right? And if they scale to that size, even if they're on the lower end of that range at 2 million, they're typically cash flow in the business, and they're doing somewhere between 15% and 20% EBITDA, right? That's typically what we see. And we're looking to take, as you know, we're looking to take that number on a consolidated basis up, into the 20s, right?
And as you look at SkyNet, has it been consistently growing revenues, or has it been kind of lagging a little bit where you think you can kind of juice the revenue growth at some point? How do you frame, obviously located in Texas, which is a good growth market, but how do you frame this acquisition in terms of its growth potential?
Yeah, it's actually grown consistently over the last 4 or 5 years. One of the things we liked about SkyNet, they've remained focused in Texas, mainly Central Texas, South Texas. They've done a tremendous job building a customer base here in this region of Texas, or this area of the United States. And so we were very pleased with the growth that we'd seen. I think I mentioned to you, Michael, that sometimes we come across acquisition targets that maybe plateau because, again, it becomes a lifestyle business. And the owner says, well, I've reached this 4 or 5 million in revenue. I've got great, cash flow from this business. It's recurring revenue. If I just take care of my customers, I can probably generate more cash flow if I cut some costs. And again, it becomes a lifestyle business, and kind of just start cruising along. And that's not a bad thing, right? Because what we find out is we can come in and re-energize sales in a particular market, when in a situation like that. And that's what we've done in the past with some of our acquisitions. But in this case, SkyNet has been growing, so we were very pleased. And as I mentioned in the press release, right, it takes our customer base up. We added about a little over 500 customers, business customers that fit our exact market, right, and the type of customer we want. And so we're going to take our customer base to over 700 here in Texas, and we're looking to grow. Texas is a high growth market, and we ought to be growing in this in the Lone Star State. So that's what we're going to continue to do, and SkyNet's going to help us get there.
And what brought SkyNet to you? I mean, what was the reasons that they decided to sell at this point?
Well, actually, I know the principal. I've known him for a very long time, actually going back about 20 years. And as you probably know, in our industry, it's very, it's almost like a fraternity out there, right? If everybody knows everybody else in the industry, especially if we're both operating in San Antonio, Texas, right? So I know Paul Gollibard going back many years. And we've been talking along the way. And I started talking to him about 2.5 years ago and said, look, this is what we're doing, Paul. We ought to talk, more specifics about maybe putting our businesses together. And one thing led to another. And a couple of lunches and coffees later, we're talking about, an M&A strategy or an M&A plan, right?
Art, let's stick with the theme of your M&A strategy. In the last interview, we talked about looking at opportunities outside of Texas and Florida. And of course, Texas and Florida are great growth markets. I was wondering if you could talk a little bit about more opportunities in Texas and Florida outside of your most recent acquisition you made in Texas. Talk a little bit about that, but then also touch base a little bit about the M&A opportunities outside of Texas and Florida, and what other markets you might be looking at.
Sure. Well, look, Texas and Florida are great markets, right? What, the second and fourth largest states in terms of GDP here in the U.S. And as I mentioned earlier, Texas market's growing rapidly. The corridor between San Antonio and Austin is just exploding. I mean, there's so much going on here. So we've got plenty of market opportunity here to keep us busy in Texas organically. And then, of course, from an M&A perspective, I can't go into detail, but we are actively in discussions with various groups. And we like the Texas market. We like the Florida market, right? They're pro-business, right? And there's no reason to deviate from markets that are good to you, right? So expect to see more in these two key states, right? Having said that, we have opportunities outside of Texas and Florida, and again, it's got to fit our model, Michael. It's got to tie back to our disciplined approach, and I think we've gone through that. You know what we're looking for there in terms of an acquisition target, and they're in every state of the United States, right? They're Michigan, California, New York, so. You'll see us expand beyond Texas and Florida, but you'll also see us be very, very focused on Texas and Florida at the same time, right? Because there's plenty of market share to grab here in the Lone Star State and in Florida.
I know that you are probably a little disappointed that the stock has not done extremely well over the last 4 months or so. It's kind of slid, but now obviously with the acquisition, the stock has kind of gained some traction, but nonetheless, the stock is still trading well below industry peers. As I mentioned, we have an outperform rating, and we think that conservatively have a 15-cent price target that's 50% above where we're at right now. And we think that with an M&A strategy, that certainly can move even higher. Can you talk a little bit about what you see about the catalyst to the stock and how you view the stock performance at this point?
Yep. Well, look, Michael, I've said this before. I believe we're undervalued, and we are, as I see it, an undiscovered gem, and we got to keep telling our story. But it's a little challenging on the OTC markets, right? I think it's difficult for investors, even if they like our story and I think we're doing great things. Sometimes it's difficult for them to go buy our stock, right? They may be with a brokerage firm that just simply won't do it. So that's a challenge we have, and I tell our team, I said, that's like you have the best product in the world, a great product out there, but if people can't buy it, you're not going to make money, right? So, it's pretty plain and simple. And unfortunately, we have limitations. There are limitations, I should say, for the average person to buy our stock. Having said that, you can buy our stock through, I think through like Schwab and TD Ameritrade and some of those brokerage houses. But our objective, as you know, is to uplist, right? We've stated that we have a goal to uplist. Obviously, we've had a lot of moving parts with the SkyNet transaction and other transactions we're working on. So we're trying to line that up to really come out at the appropriate time, right? That I believe will enhance value for our shareholders, right? I think once we get on a primary exchange, and again, the investors can easily buy our stock. I think that'll change. I think now we got to keep telling our story. We got to keep executing, right? And we got to keep delivering on what we're saying we're going to do, not only on the M&A side, but organically. And at the end of the day, our financials have to show good results, right? Of what we're doing, right? Again, we're not just buying revenue for the sake of buying revenue, right? We're buying these assets and these companies to stack the revenue and continue to improve our EBITDA results, right, as a percentage of revenue. So I think if you see as the market sees continued execution of our plan, and again we reach our objective of getting on a primary exchange, I think it'll all take care of itself, right? And we got to keep telling our story, right? And thanks to you, you're helping us with your reports. We appreciate that, right? I believe you are writing on this company because you believe in our story and believe on what we're doing.
Thank you for joining us for this C-Suite interview presentation brought to you by Channel Check. View our YouTube channel for more video content, including C-Suite interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelcheck.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and micro-cap companies listed.